All right, folks, it's Friday, August 18, 2023, video update number 2, a little real estate session. I know you guys want to see how I'm moving on real estate, and I break down the deals that I'm looking at and how I'm going to be moving in this asset class exclusively over in my Discord community. I can't talk about these deals publicly, so if you're looking to get tapped in with us, we're going to be having our Discord weekly call every Saturday, 8:30 a.m. Pacific Standard Time. You just head on over to my website, sign up for our Patreon. That's where you pay for your membership to join the club, join the family, and we would love to have you over there in the Discord group. So with that being said, let's get right on into it, folks. We're talking global real estate liquidations underway, and we're going to get right on into it. So we have only 1% of U.S. homes have changed hands this year, the lowest in a decade. No one can afford to move from their 2%, 3%, and 4% mortgages. Geneva Roach-Decter sharing this one with us, and yeah, the situation at hand, folks, is that many folks, similar to having the golden handcuffs on, someone with a high-paying job that they hate, right? You don't want to give up that job. You got the golden handcuffs. Same thing taking place with the real estate, and this is why only 1% of all U.S. homes have changed hands this year, lowest level in a decade. And it's because the unaffordability is not there. Average interest rate on a 30-year mortgage rises to 7.24%, the highest since 2000. Now, in some states, the average rate on a 30-year mortgage is already above 8%. How about that deal, folks? 8% mortgage payment. You know, coming from 2 and 3%, it's undoable. It's just not even a reality for most folks. Now, for the boomers that are telling us about how, they bought their first house when interest rates were 15%, well, yeah, the houses were $40,000, right? Now the median home is $400,000, and we have massive inventory is a massive 46% below the historical average. Buying a home has become a luxury with rates, encroaching on 8%, and the average right now is 7.24% across the country. Now, just a reminder, your house that was worth $462,000 at 2.7% mortgage rates is worth $280,000 at 7% mortgage rates. So that average $1,850 per month payment, right, is only going to get you a house that's $280,000, which in some markets you can still get a brand new house. You can get a brand new spec home for $280,000 in a lot of markets still, right? But not the desirable ones, right? The average coming in at $462,000. And so this is the real estate reset that is underway. We have to adjust. The United States has lost $5.9 trillion in wealth since last year, more than any other country in the world. And so what's happening is this is, impacting the real estate. It's impacting equities. And we have a total of nearly $6 trillion in wealth that has been lost since last year. Folks, and this is why we say that not everybody's going to win and be on the right side of the transfer of wealth that is underway, right? Now, what's hitting here is crisis hit Chinese property giant Evergrande files for Chapter 15 bankruptcy in New York. This is a situation that we've been talking about since 2021, right? Ever since their ship got seized in the canal, right? And so we've been following this story, this situation, and we've been talking about the ripple effects that were going to be felt when this company did finally go bust. Now we're finally starting to see it. And Minus Wells here on Twitter gives us the breakdown of why this is so important. It says, what's a big deal is Evergrande filing for bankruptcy. According to recent reports, Evergrande is the world's most indebted property developer with over $300 billion in debt. This bankruptcy should cause construction projects to come to a halt, unfinished projects damage investors, a slowdown in economic growth, a decline in home prices and housing market, job losses, financial instability. This is because Evergrande has a large number of creditors, including banks, insurance companies, and other financial institutions that will get devastated. World markets could be affected. Is this the last black swan? What comes next? Well, it's only going to continue from here. And perception is reality. And when we talk about the perception of potentially having another Lehman moment, but this time in China, right, this is inevitable. This is underway. It is happening, and it's being confirmed in the data. We're seeing it definitely up there in Canada. Huge shout out to our Canadian brothers and sisters up north. 22% of builders cancel projects, sales down double digits, looks like a contraction and rise in unemployment in construction sector. Now we look at this one right here. This is the protests that are taking place in China right now. These investors that invested in this shadow bank have been out protesting, and now we have the Chinese police visiting investors at home to quash the unrest. This is what happens when you're in a in a new world order model country like China. And police receive names of clients across China. Investors say fears of contagion mount after, not even going to try to say the name of this shadow bank, missed their payments. And so the liquidity crisis is spreading rapidly. Contagion not under control. And so, what's happening here is that they don't have freedom of speech. And when you go to protest and the bank doesn't have your money, investors are losing their money, you don't have the right to protest that in China, right? And they're trying to quell this as fast as it's taking place, but the word's getting out and it's being impacted and reflected in the markets. China's second largest developer, Country Garden, with annual revenues of more than $70 billion, is on the verge of collapse. The company's 8% bonds due in 2024 are trading at a paltry 9 cents. Signaling massive losses for the bondholders, the yield is skyrocketing, meaning nobody expects to be paid. China's property meltdown continues. And so we get this one too from TD Leaker on Twitter. It says, my Chinese source reports that they were ordered to start liquidating foreign holdings a month ago. Look at all these 4 million plus holdings flooding the market. Gee, I wonder what is happening. Hashtag Evergrande. Now, this is in the greater Toronto metro area, and you're seeing all these listings, 4 million, 5.7, 5.5, 6.8, all of these listings, 8.5, that have come online just within the last month. And so I can neither confirm nor deny that. All I can say and report is that the ripple effects are going to be spreading through based off the crisis that's happening over in China and how much money has been flowing into the West in some of the high-flying speculative real estate markets where they've literally been trying to take the money and run as fast as possible out of their country over there in China. And they've been flocking to the west coast of the United States, Canada, Vancouver, BC, Toronto, Seattle, San Francisco, even New York, Miami. Some of the bigger cities here in the United States have seen inflows from foreign investors who are trying to get out of situations that are worse than what's taking place here in the U.S. Now, when it comes to the U.S., our hedge funds and the big iBuyers, the big Wall Streeters, are taking massive losses as well. And the case in point that we have right here for you guys is the Zillow team losing $881 million in 2022. Once again, Darth Paul sharing this. He says, Lord, give me the confidence of Zillow executives continuing to pretend they know what real estate prices will do after losing $881 million in a single year, failing to predict real estate prices. And so just a massive L by Zillow. And you're seeing this spread once again across the planet. Global mass liquidations are hitting the markets across this planet. Here in the US, we're starting to feel it. And then you're seeing big losses by Zillow and other Wall Street investors that moved in the real estate market as well. This is our opportunity, folks. We're going to be able to get to tell our children and our grandchildren that during the greatest transfer of wealth in world history, we weren't just scaling up our businesses. We weren't just buying suppressed assets like silver while it was trading at $20 an ounce, buying XRP while it was trading at 20, 40, 50 cents an ounce, but we went into the real estate asset class in a major way. And we bought all these properties that are going to, build out our cash flow portfolio that we'll be able to hand on down to the generations below us. And we'll be able to, build serious amounts of wealth over the next 5 to 10 years. Right now, the way that I'm looking at real estate is it's a lagging asset class. So you really have to understand that, right? And so we see that the Fed is not going to be pivoting until next year. From all of our data, all of our research, our conclusion and speculation is that we don't get the pivot till next year. Now, in the meantime, we have more pain on the way, all the way through the rest of 2023 into next year. We're going to see a tick up during the spring selling season, just like we always do. That's what happened this year. We got that uptick during spring selling season. We actually reached new all-time highs in some markets, but now we're back down. Now we're correcting. And so this is going to be a process that's going to play out over the next couple years. This recession is not going away. This recession is not over. And I'm going to be making a separate video, and I'm going to title it something along of Own This Recession. And the point being, as I've been saying, it's up to us to take advantage of this transfer of wealth, not just in our businesses, not just in real estate, but in every single aspect. And for us who are prepared, we're getting liquid, we're building our partnerships and our resources and team to move into these asset classes with professionals and experienced advisors around us. We know that we'll be able to not only buy, properties at a discount, but we're going to be able to improve the value of these properties with strategic plans that we'll be executing on over the next couple of years. It's a very exciting time. And I was talking last night on the Twitter Spaces platform, and I was saying the problem with our research and being so over the target and so early is just that, is you're early. So we were talking about Evergrande 2 years ago. Now we're finally starting to see it play out and impact the markets, right? We saw one of the biggest liquidation events happen in the cryptocurrency space yesterday, and it's going to impact real estate. Crypto, you get to see the market move that day, right? In 20 minutes, we liquidated like 7.5% of the Bitcoin price. We lost a couple $1,000s in price in a matter of like 10 minutes. With real estate, it's going to be lagging out over the next couple years. And so for us, it's time to step in, take advantage of the opportunity, and let's build some serious wealth, folks. If you're looking to get tapped in, like I said, we get a little bit more intimate in the Discord group where folks can share their deals. I can share my deals. I can't speak on the deals and everything that I'm looking at publicly. I got too many local real estate agents, investors, and folks that we do business with locally that watch my show now. So I can't comment on how much of a joke some of these folks and some of these deals are. But over in the Discord group, we can get and have those conversations. That's why we started the group 2 years ago, was to have a safe space outside of the censorship that we saw on social media. But now we've transitioned into talking about our investments and the deals that we're looking at on another level. And I'm really looking forward to tomorrow's update. Discord weekly call, 8:30 a.m. Pacific Standard Time. If you're looking to get tapped in, it's Patreon, gets you access to Discord. ZachRector.com is the website. And on the way out, if you appreciate this real estate update, all of our content that we're putting out, make sure you smash that thumbs up for me, hit that subscribe notification bell, and I will see you guys in the next one. God bless all of you.